So yeah, if we're jumping for some opportunities for the recent week, Miles, please tell us, what do we see here?
Yeah, so here we have a 3-day time frame on, it was updated on January 27th, and we could see stocks like Palantir up 2.84%. We have Capital One Financials, you have General Electric also up 4.5%. And at the bottom, you can see Meta. Meta was up 6.10%. And actually on our YouTube channel, a day before, on January 26th, we gave a Meta forecast. And actually the next day was when January 27th was when the DeepSeek news came out and the market tanked. But actually Meta was positive. Meta actually went up 1.95% the next day. And so here you could see just the algorithm giving you guys the best forecasts. And so you could see in these 3 days, the S&P was down -0.5%. And while the annual first average return was positive 1.23%.
Yeah, outperformance of almost more than 1.5% outperformance versus the benchmark versus the S&P itself. This investment universe includes S&P 500 forecast. So basically, we managed to build a portfolio from the S&P that is outperforming the S&P. But this is a simple use case of using a short-term prediction, a short-term forecast, and to build a portfolio based on those forecast equally weighted portfolio, as you can see here. And yes, Meta was a very interesting opportunity. By the way, we chose Meta to do a video about Meta because we saw the high long-term predictability of Meta. So it's a perfect example. Always when you're choosing, even if you're choosing a short-term stock, always check and make sure that the stock is predictable, that the predictability is high, basically. And here we jump into the next time frame, the 7 days forecast. As we can see here, the 10 stocks that the algorithm identified in one of our packages for the 7 days time frame. Again, we can see the outperformance versus the S&P 500. Take a look at the predictability, the number that you see in the bottom. As said, it ranges between -1 and 1. 0 is around, if I'm simplifying it, 0 is around 50%. So everything that above 0 is something that you're going to basically receive in the forecast. So this is the 7 days time frame. Interesting to see CVS here. And this is a 14 days forecast that was generating on January 16th, the 10 stock that the algorithm identified.
And also in this forecast, you can see stocks like Citi, you could see JPM, you see some of these banking stocks, and the banking sector has been doing pretty well recently, and our AI algorithm is picking up on that. So it's giving you some picks from the banking sector.
Exactly. It's interesting to see also Logi here that made a very nice performance. This is an example of our dividend stocks package. So it's really interesting again to see the outperformance. And this is an example of our 1 month forecast, 1 month top 10 forecast. This forecast includes not only the 10 stocks to buy, the 10 opportunities, it includes also a daily S&P 500 forecast. And in this case, we can see the 10 stocks that the algorithm identified basically 1 month ago, by the end of December 2024. Time is flying. We are already, after 1 month, we are already in February 2025. We can see here the 10 stocks. Among the stocks, we can find here TWLO. Mike is going to talk about TWO later on. We can see here also Logi again. We can see HIT. We can see Zillow. We can see Google that made very nice return at the beginning of the year so far. And the overall performance is like 12 times higher than the benchmark, the market. And of course, the S&P 500 forecast is also positive for this time frame. So it's a very good, and basically it's one of the most popular packages that we do have. So I believe that a lot of the people that are in this webinar today are receiving those opportunities on a daily basis. So this is the opportunity from the 13th of December. And another exciting prediction is the 3-month one, right, Miles?
Yeah, so on the 3-month time frame, we see an amazing forecast. I mean, the annual first average return was almost 49%, while the S&P 500 went up 3.90%. And we have stocks like Shopify, Palantir, Robinhood. But what's very interesting is that we have a lot of AI. We have a lot of AI software companies like Shopify, Palantir, Robinhood, DocuSign, TWLO, and these AI software companies are taking the market by storm. And so we see a lot of the same type of companies in the same forecast, and all of them outperformed by a lot.
Right. So we can find here, as you said, MSTR, Palantir, Robinhood, TWLO, HEAT, very interesting. And again, please don't forget the S&P 500 forecast that is part of every top 20, top 10, or top 5 package. It's a very important market indicator because it's providing you insights whether you need to be in the market or not. If the S&P 500 forecast is positive, it's great time to build a portfolio, to focus on the top part of this heat map. If the S&P 500 forecast is negative, you should be more careful. You should use the bottom if you're able to short sell stocks. You should use the bottom of the heat map. We will see later how to do that. Wow, take a look at the DocuSign, right?
Mm-hmm.
Very interesting performance. It's only in a 3-month time frame. And of course, we have seen the MSTR, the movement of the Bitcoin beyond the 100,000. And it's interesting to see that the AI algorithm was able to capture those opportunities. And also, please look at the predictability. Again, compare the predictability that you see here. For example, with the predictability that you see here, you can see that this is the 14 days time frame. You can see that the predictability is around, let's say, 0.4 on average. But if we're moving to the 1 month, where we can see higher predictability, it's around, I would say, 0.53. And if we are utilizing the 3-month forecast, we can see that we are already, we have higher level of predictability, 0.6, 0.7. And if we even utilizing the 1-year forecast, we are receiving even higher predictability. Look at General Motors, 0.85, or WSM. It's a very high predictability, or MSTR. I strongly suggest to focus on the most predictable stocks, because this is what the algorithm is trying to do on a daily basis, to focus on the most predictable assets. And therefore, I do suggest to use this predictability score when you're taking an investment decision. And of course, you can see a passive portfolio that was built basically 1 year ago, based on the mid-cap investment universe. So, see the correlation between the predictability and the actual return. It's very, basically very interesting to see MSTR and UPST return, and also to compare it with their predictability.